Welcome to the Daily Insights That Matter. We begin today's DITM by talking about India's inclusion in the Key Global Indices, which has been delayed due to the operational issues. The Indian government bonds will likely only be included in the JP Morgan Emerging Market Global Index early next year, as various operational issues still need to be addressed. Additionally, smaller asset managers and funds' reluctance to register themselves locally as foreign portfolio investors is further adding to the delay. Now, India has sought to be included in the global bond indices since 2013, but that ambition has been held up by a number of factors over the years, and JP Morgan only began considering India's inclusion in its global bond index in 2021. India would be the last major emerging market to be added to the JP Morgan index. While India is working to get its bonds included, operationally it does not seem to be ready yet. The local bond settlement rules, the tax complexities, and the way in which investors will repatriate dollars are among the operational issues that still need to be resolved. Now, most of the index investors are in favor of including India in the index, but think that issues such as investor verification and settlement rules need to be ironed out first. Additionally, many small asset managers and funds are reluctant to register themselves locally as foreign portfolio investors, as they think that the costs of complying with the regulations may outweigh the eventual benefits that they get. Now, if India is included in the indices, it could ensure potential inflows of up to $30 billion into the Indian fixed income securities. The government and the RBI are expected to sort out some of these issues by the end of 2022. Additionally, discussions about tax matters and Euroclear settlements are also in progress. That being said, most of the heavyweight investors and funds are in favor of India's inclusion in the global bond indices, as it is a way of mitigating concentration risk arising out of China. Now, the operational issues can be attributed to the initial teething issues and do not in any way direct towards a non-inclusion. That said, all the concerned entities are working towards addressing the said concerns and look at an amicable solution on the same in the near future. Now, in September, for the first time in a year, OPEC plus its allies led by Russia had agreed to make an oil production cut. But the trim was so small that it was about 0.1% of the world's total output. Yesterday, the OPEC plus its allies decided to cut oil production by 2 million barrels per day. This is the largest cut since the beginning of the pandemic. Let's look at this as well today. The OPEC stands for the Organization of Petroleum Exporting Countries, which is a bloc of 13 oil-rich countries. This bloc controls close to 40% of the world oil production and coordinates on the production levels of oil. Now, oil prices skyrocketed after Russia's invasion of Ukraine in February and have since begun to soften over the past few months before dropping sharply to under $85 in September due to the fears of a recession in Europe and reduced demands from China because of its lockdown measures. Now, on the back of this, the OPEC plus its allies have decided to cut output by close to 2 million barrels per day, or about 2% of the overall global supply. This has been the biggest output cut since the start of the pandemic. The OPEC Plus said that its latest decision was taken in light of the uncertainty that surrounds the global economic and the oil market outlooks. Now, the oil prices can rise as quickly as they can fall, both unexpectedly and abruptly, and we've seen that multiple times. The crude oil prices are expected to remain volatile, as there are a number of factors at play here which are feeding into a highly uncertain outlook. So what does all of this news mean for you? The delay in the inclusion of Indian bonds in the global indices are just initial teething issues, and they nowhere point towards a non-inclusion at all. This will have an indirect neutral impact on you. Now, while there are multiple factors impacting oil demand in the short to medium terms, the attention has momentarily switched to economic and inflationary worries and the extended COVID lockdown in China being the key considerations. This will also have an indirect neutral impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.